What exactly does it mean when big companies stop giving guidance to investors, and how should investors respond to that? Let's bring in money and business expert Derrick Kinney to shed some light on this whole process. Derrick, thanks so much for being with us.
My pleasure. Good to see you, Jason.
Good to see you as always. So we keep on hearing this from different companies who just don't want to put a number out there in front of investors. Ford says that tariffs are the reason that they pulled their 2025 forecast. Why is it that big of a deal for investors if Ford pulls back and these other companies also pull back on guidance?
Yeah, this is a big problem, Jason, and it's almost unforeseen that we've had this happen before. Most investors, especially people on Wall Street that sort of project out how mutual funds may do and stocks and bonds may do, they looked at this guidance as sort of a report card to say, here's how we did last quarter, and here's how we expect things to go next quarter. In absence of that, it causes a lot more risk for the average investor watching right now that puts money in their 401k or their IRA. So beware that there may be more volatility. So the more talk there is about tariffs, we may see volatility, which may mean your account goes down lower in the short term.
So Derrick, when a company stops giving guidance, or as we've been seeing lately, multiple companies stop giving guidance about what they expect in the near-term future here, should that be making investors nervous? Or is this just kind of a smart business practice when times are really uncertain and these companies just don't want to put something out there that they may not be able to live up to?
Well, the reality is everybody wants to keep their job. And so these CEOs and CFOs of these major companies, they're hesitant to put their numbers out there because they don't know. They don't want to be held accountable to numbers that they can't be responsible for. So I don't blame them for that. But yes, this will likely make investors, those on Wall Street, much more nervous. But what we know is that instability leads to volatility. And so I do anticipate, just being a voice of reason for all of our viewers right now, we're going to see continued volatility. Even today, for example, as President Trump talked, the market was off almost 400 points, now talking about some waffling a bit on the tariff piece. And so what he says has weight. And so we're going to see a lot more volatility, especially over the next couple weeks.
Okay, so when a company like Ford, though, pulls back and says, we're not going to share numbers right now, things are just too uncertain for us, what does it say about where the economy overall, or even just more specifically, the car market is heading?
Well, this is bad news for the car market on a couple fronts. First of all, a lot of parts, not necessarily the cars themselves, a lot of them are manufactured and really made here in the States, but the parts come from Mexico, China, all over the world, and that's what's causing some of these tariff-related issues that are there. So that's bad news for the car business, but on the bigger scale, what it says is uncertainty. What we know right now is that 2/3 of the economy, Jason, is based on how comfortable do you and I feel about spending our hard-earned money. And if we're nervous, anxious, worried about the economy, losing our job, tariffs, paying more for eggs and bacon and milk, we're likely going to spend less money, which could cause a recession. And that's the worst fear on Wall Street right now.
Last thing for you here, Derrick. If somebody owns Ford stock or they own stock in one of these other companies that has decided to just suspend guidance right now, or if somebody just has a 401k, how should they be thinking about investing during times like these? Because even if you're listening to experts who predict what the market's going to be doing, they're not getting this information anymore either in some cases.
That's exactly right. It's buyer beware right now. I've talked about typically when the market drops, I like to suggest people go in, buy while it's low. Typically when people are running from stocks is when you want to run toward them. Right now, though, I don't want to lead our viewers astray. I think right now you just want to sit tight, and the best strategy is if you're adding money to a 401k or a consistent investment, just keep doing that every paycheck. One paycheck it may be worth less, one higher. Just keep dollar cost averaging, easing money in. I wouldn't make too many huge bets right now. Just the stakes are too high. I don't want you to lose a lot of money.
All right. Hopefully we see more stability, less volatility ahead. Derrick, thanks as always for walking us through it.
My pleasure. Thank you, Jason.